Hello everyone and welcome to today's Market Insights with me, Richard Perry, analysing markets for Infinox on Friday the 16th of July. Now into today's markets there is a fairly mixed outlook across major markets. We've seen that the dollar strengthening that we've had in recent weeks has just started to lose a bit of impetus, although there is a slight dollar positive bias, you could argue, this morning, but nothing too decisive. The key move that we are seeing is through the Kiwi at the moment. We've had the RBNZ decision on monetary policy earlier this week, which was more hawkish than expected, and also the inflation data out of New Zealand today has also come in ahead of expectations above 3%, which again starts to generate speculation of RBNZ rate hikes. So we've also had the Bank of Japan overnight. No real changes expected from the Bank of Japan, and nothing got either, but there were some slight tweaks to the growth and inflation forecasts, slightly higher on inflation, a bit mixed on growth, but little real change on the yen as a result. So with regards to today's session, we're looking out for the US data again this afternoon. We've got the retail sales numbers and also the Michigan sentiment data as well, so that will be looked at this later today. Now, with regards to the Infinox support and resistance table, that is at the end of the video. And on to the charts we're looking out for today. Well, we're looking at euro dollar, which is still trading with a negative euro bias, but the dollar strengthening has started to ease slightly. So is this going to break down? Also on dollar yen, looking a little bit more mixed, but a key level of support is holding, but that does need to hold, otherwise it could turn into a big top pattern. And also looking out for the oil price, Brent Crude, few signs of a reversal after some strong gains, but what could happen and what will it take to break it down? Let's have a look at these charts. And on the Infinox MT5 platform, I'm just going to start very briefly with the dollar index, where you can see that the big rally on dollar has just started to turn into more of a ranging move. A few choppy signals there on this chart. We can see that the mixed candles and the resistance coming in around the 92.80 level, a little bit of a changing range over the last couple of weeks. So if you look at that and then go on to euro dollar, you can see that euro dollar is actually still falling slightly. So that would suggest a euro underperformance, and these run of lower highs and lower lows on euro dollar really does suggest that. And the pressure is mounting towards the key levels of support, 1770 down towards 17 big figure. If I go up one more level, you can see the importance of that 17 big figure level of support. So that is really what we're looking out for at the moment, is whether this momentum that we've got, this just slight unwind, really does improve renewed downside potential for selling into strength on euro dollar. We can see that rallies continue to fall over, and pressure is still mounting to the downside with that negative bias throughout the momentum indicators that we do have. That's the 4-hour chart. You can see that there is still an attraction towards the levels of support. And on dollar yen, well, if I go out one more, you can see that this big uptrend on dollar yen has now been broken, and also that uptrend has been used as the basis of resistance now. The concern I've got with this is this could turn into a head and shoulders top. It hasn't done so yet. It really is finding support around the 109.70, 109.50 area, and that is a key area of support that does need to hold. In terms of the momentum, it's looking a bit more choppy, a bit more ranging. You've got the moving average, which has rolled over. So it's now trading within the moving averages, and they're basically flat. So this is very much range territory on dollar yen at the moment. Out 4-hour chart, again with a slight negative bias, considering we are still falling away through recent sessions. And I think the market, if it doesn't again get back above that 110 spot 10 level of resistance that has been formed yesterday, we could again put pressure back towards 109.70, 109.50, and that would then be the key test for dollar yen. And finally on this oil chart, well, I did a big report on oil yesterday on the website, so you can go to the website to look at that. But you've got these 3 bearish engulfing candlesticks, which really does suggest that the market is now beginning to get a little bit concerned about how high it's got. The corrective signals are now starting to grow. The momentum's fallen over around 60 on that RSI, fallen back under 50. That's never great. And if you look also at the other technical signals, the stochastics are now falling away quite decisively. The Bollinger Bands have flattened off. They're relatively tight as well. And also the MACD lines are in this sort of corrective stage as well. So the support that comes in on oil, on Brent crude, comes in around the 72.60 area to 72 figure. Certainly 72 figure, if that got completed to the downside, that would be, well, broken to the downside, completes a top pattern, and would then start to look at a much deeper correction on the Brent crude price, back to maybe even the sort of bottom of this uptrend channel, which has been in place for since the March time. Thank you for watching this video. I hope you found it informative for your trading. Join me again on Monday, where we'll be looking ahead to the new trading week. So with that, I'll leave you with the Infonox support and resistance tables, and I will speak to you then. Thank you very much.